Okay, next up, Agent Select. And we're going to hear from David Ginnane, who is their CEO. David.
Okay, thank you. So yeah, David Ginnane, I'm the CEO of Agent Select. Let's jump straight in here. Right, here we go. So Agent Select, we're a property advisory and technology business, and we fundamentally solve a problem, one of the biggest problems that consumers have in our market in Australia and ultimately in other markets around the world. That's the problem of selling their property. For most people, it's a very complicated, expensive process, and in our market in Australia, it's dealing with a real estate agent, which for many people involves an inherent level of distrust. So we're effectively an advisory and technology business. We act on behalf of individuals and organisations that have a need to sell a property. How we go about that, we effectively have created an online marketplace where we connect home sellers with a real estate agent. How we go about doing that, and I guess this is the core of our technology, the IP, is we've built a performance algorithm where we've aggregated the performance data of every real estate agent and every real estate agency in Australia, which number in the tune of circa 40,000. And we can instantly performance rank every real estate agent in the country for any given residential property in Australia. Let's jump forward a bit more. The business has been running now for close to 4 years. We're well established, we're well post revenue. We've got a strong client base and real momentum in the business. Right now we've got circa 900 to 1,000 properties within our portfolio, and not only do we service the direct-to-consumer market, which is the largest market in the country, but we've established a very unique and specialised channel in the banking sector, the retirement living sector, and insolvency and bankruptcy practitioners. We've had great momentum, as you can see, looking over the last sort of probably 2.5, 3 years. Very strong trajectory of growth in the business, and this graph effectively shows you the new business originations we have on a monthly basis over a circa 3-year period. So coming into the start of this calendar year, we're running at circa 100 to 120% year-on-year growth, and we expect that trajectory will continue into the foreseeable future. So there's a direct-to-consumer market, and this is for, I guess, the average home seller that sells in Australia once on average every 10 to 12 years. And that's the biggest addressable market, but it's quite an expensive market to access in terms of cost per acquisition of new customer. What we specialise in is corporate partnerships, and those partnerships have got a centre of gravity in that banking space. And with banking, there's a macro theme in Australia at the moment where it's had 10 years of phenomenal growth, 10 years of easy access to credit, where a lot of people have invested quite heavily in property. What we're seeing now is, as the macro cycle turns, is that the level of property growth is now starting to taper off and start to move into a decline. It's not going to fall off a cliff, it's just moving into a bit of decline. At the same time, the level of mortgage stress within the country is growing at a rate of knots. That's because, I guess, the disposable income in the average household is getting tighter and tighter as wage growth is low, unemployment starts to rise, underemployment is rising quite quickly. So all of those things point to a thematic that says if we can partner with, and we do partner with major banks throughout Australia, we effectively can help the borrowers who have got to a level of mortgage stress exit the property prior to a foreclosure event. So very quickly, I think that the key appeal for working with corporate partners in the banking space is that it's got a very low cost per acquisition of customer, and it's got a very high margin. And equally, when you think about people that are selling their property under some form of duress, whether it's mortgage stress or otherwise, it's a compelling need. So they're driven to take quite rapid action. And that rapid action flows through, by way of example, one of our major partners is Westpac in Australia. So the referrals that they give us from their customers that are in mortgage stress, 88%, nearly 90% of those customers instantly take up our service, and they move very quickly to selling the property. And to date, over a very short period, we've sold circa $30 million worth of property and saved our bank partner about $3 million in cost. We've got quite a large and credible pipeline of B2B or corporate partnerships that are in play. So outside of Westpac, we can talk about Pepper Money, which is one of the largest non-bank lenders in the country and has got probably a lower quality sort of mortgage book relative to other lenders. We've got a very strong, credible pipeline of new prospects, other major banks, several of which you can see here, that are very close to making a decision. As we bring them on stream, what that means is that there's a deal flow of customers coming to us that have got a compelling need to sell their property. And that's quite attractive from a margin perspective. Other sectors that we operate in terms of our corporate partnerships are retirement living and aged care. And if you think about that, the people that are moving into a retirement village or into an aged care facility are generally living in their family property. They've got a compelling need to sell that property to fund the purchase of a new retirement villa or to fund the bond that is required to enter into an aged care facility. So partnering with large organisations such as Lendlease, such as Lifestyle Communities, soon to be Stockland in Australia, that provides us again another very large and credible pipeline of deal flow, i.e. customers that are coming to us with a compelling need to sell a property. So while we're in Australia at the moment, and we've been running in Australia now for coming up to 4 years, we've had some approaches from other markets around the world, notably the UK, Canada, and in this market more recently sort of Malaysia, and to a lesser extent Singapore and India. We've been quite disciplined in our view in terms of wanting to get the Australian market right and solid and a very strong bedrock of operating performance, but I anticipate that over the course of the next 12 to 18 months we'll be in a position to start exploring those external markets. So as I said, we're a provider of services to people and organisations that are looking to sell their properties. We solve a significant problem for themselves, and for our corporate partners we solve a significant problem as well by helping their customers exit a property for the reasons that they need to. Good strong trajectory. We're going through a raise at the moment, a very notional small raise of circa 2 million Aussie dollars. About half of that has been covered already by existing shareholders, and the balance of the half we'll look to source over the coming sort of 3 and 4 weeks. So if anyone would like to know any more, please feel free to come and grab me after this presentation or round at booth 22. So I think I've just made up a bit of time here and take any questions.